J.P. Morgan selling Treasuries to the Fed in order to get liquidity. That's what I was speaking about. I think the Fed's balance sheet is rising as a result of the standing repo facility, not the reverse repo.
Both, because they're both put in together so that they can finesse, and that's the right word, finesse the short end of the curve, especially because
That's where if the Fed's balance sheet is rising, that means they're doing more repo than reverse repo.
Yes. Oh no. Absolutely. Because you're swapping your treasury bills, whatever the duration is, and other debt. I mean, you could swap 5-year for cash, right?
Yeah. So here's what's crazy. As the Fed starts doing quantitative tightening and lets their balance sheet run off to whatever degree it might be, market participants might be, choking on that stuff. Okay, so they buy it, but then they need liquidity because the Fed is actually tightening, and they've got to turn right around and get liquidity. Well, how do they get that liquidity? By doing 2, 3, 1 week repos with the freaking Fed. And then I'd love to know how swamped the repo desk is at the Fed right now.
Yeah, that's a very good question. Yeah, that's what that standing repo facility, and there is no limit. If you really look to see how they put that together, I've said this many.
Well, yes, and that was going to be my next point. The next thing to look for is the Federal Reserve Chairman, Jay Powell, increasing the limits per participant.
We don't
now where to find that, I don't know. No, he has the right to increase it. No, he does have the right to increase it. I'm agreeing with you. Yeah. What I'm saying is, I wonder where we go to find out. Where do we go to find out if he's been increasing it already, and to whom?
Oh, yeah, it's out there. I'll ask my little daughter where she goes. I'm waiting for many things, but it does get very interesting here. And as she says, the Tbill runoff, which they're going to add to, becomes a filler when they don't have enough longer duration. But I don't know how they think there's going to be that much running off on a monthly basis. So they must anticipate selling stuff when the market's quiet enough. I can't. You think there's going to be 95 billion of runoff?
Well, I don't know. They're going to do whatever it is they think they got to do, based on their backward-looking freaking data points.
Yeah. No.
Now, you know what's really interesting?
Yep.
And this is for you too, Andrew. So the last few days, the sectors that are preferred during, I'll call it Quad 4, utilities and REITs, right? And third and fourth place is consumer staples and healthcare. And if you look, those are the sectors that outperformed yesterday. They're outperforming today. So the bond market, the Treasury market, the aggregate bond market, I think it's pretty safe to say, Ira, that the problem in the bond market is the anticipated supply, period. Because otherwise, you wouldn't have REITs and utilities, which are bond proxies with quality cash flow. They wouldn't be outperforming. And they're doing exactly what they're supposed to be doing when they're supposed to be doing.
So what you're saying there, Angelo, if I understand, is that all evidence leads you to continue to believe unequivocally that's Quad 4, but the bond market, while it's going down, thank God you have a stop loss.
Yeah. I mean, the short end is up a bit today, which I would have expected. Right. So now, bond funds, bond investors, long-only bond funds, hedge funds, right? They're going to have to pivot out of the long end to the short end. What choices do they have?
Well, it comes back to my thinking around whether it's Putin or whether it's, China or whether it's whatever. They have to land this problem they've got with too much debt for a long time. So bonds will have to play a role in the loss of that, both in terms of, defaults in some jurisdictions, not the US, because the US won't default on anything while they're the power, but there'll be defaults in other jurisdictions without question. So there'll be, so that's why Robert, continue to come back to wanting to hold things that won't have any counterparty risk. And the other thing that you've got to remember now, anyone who holds gold in ETFs and on, trading platforms, be careful, because there will be a premium to own physical gold against, now that the Russians have done what they've done, against the exchange funds. If you don't understand that, then you can reach out. But the short answer is, if you saw what happened to nickel at the LME, be careful. It can happen anywhere. They cancel.
Andrew, I have always told people, make sure you understand the difference between physical gold and paper gold.
And if you want to own gold, just go and find a really good miner that understands how to manage the costs of running a business. That they own the gold, right? If you want to own the physical gold, which I do, but it's not easy for everybody to do. You just got to store that in a safety deposit vault. But
okay, there's your reversal, guys, on the 50. So that confirms that 45 low. So we'll see how far this rally goes. And it's Wednesday, so you probably got the extreme for a low. You got to see how far this rally goes. And I have no opinion about tomorrow. Go ahead. Sorry.
And the other thing, I like being short junk bonds as well. That's kind of an easy trade. And
I don't know why.
Well, I think I think again that's a great pair trade. Short junk bonds own the sovereign treasuries in the States. That's a good trade. I agree with that.
Yeah, that works. And look, junk bonds don't have high volatility. I mean, I'm expecting volatility to rise, but it's not like they've got 60 vol or anything like crypto does. So you just have to gross up that short position a little bit more, just like gold. Gold doesn't have high volatility.
Doesn't.
But so it's all about position sizing with respect to the underlying volatility of the instrument.
Yeah, and ultimately, and look, I'm not. I'm a god in love with gold. I mean, gold's showing me from over 100 and thousands of years of history, but in the monetary system, I understand since 71, it's played a role through crises in different financial, because the world changed in 71, and that's the world we're still living under, albeit it may be changing this year as a consequence of what's going on out of Russia. I don't know, but it's worthy of observing. You can do the same numbers against platinum, copper, even copper bonds. Look at copper bonds; they're breaking up to the top side. Long copper, short treasuries.
The only thing with all of this stuff, Andrew, is that in the early stages of a crisis, right? Let's just take early March of 2020, right? But the same thing happened in 2008. Correlations go to 1. And gold gets tossed out the window. Treasury bonds everything gets tossed out the window because people need.
That's why
they're raising cash.
That's always why I do gold to stocks, because even if correlations go to 1, I assure you that's when gold does its best work. It just doesn't go down as much. And when in March of 2020, when I was very long the gold, short the stocks. It gave me strong hands to buy the stock market. Sorry, to keep the gold in my hand. I didn't buy the stock market. That's when I got in trouble because I kept selling it. But I didn't lose my gold because basically I made money because I was long gold, short stocks. Because if correlations go to 1, I assure you that's when the gold to stock ratio improves. And that's why my thesis remains until I can, and I'll continue to test the thesis. That's what you got to do as a macro thinker. That's why I think the ratio of gold to stocks will go under the lowest ratio it's ever seen. And that's a big move, 18 to under 2.
I can't afford your tests.
Look,
we know how much you like sending out a couple of soldiers to see
You
what
know,
happens.
you know, I always have reconnaissance missions.
You know, but I've been talking about this for there's several days now.
Mhm.
The industry group called the transports have been getting clocked. And transports, the truckers, the railroads, right? They are
Right.
among the most highly sensitive of cyclicals. And they're
Yeah.
just, they're just getting creamed and creamed again.
Yeah, what's his name? He had that article, and then Bookbar, who's a regular, monitoring freight rate, the Cass freight rate index. Yeah, and a lot of and inventories are building up dramatically too, which doesn't help the long debt end, by the way.
Yeah.
Judd,
and trucking, the speed time with railroads and truckers is increasing.
Right.
Okay,
Right.
that's never good.
Yeah. Nope. Absolutely right. You're 100.
Judd, can you check something? I mean,
Sure.
So Tesla, right? If it closes under, am I correct to say? And it wouldn't be wonderful that Tesla tops on the day he bought 9% of Twitter of the week. If it closes under 1002, is that a outside reversal lower week?
It needs to close under 53.60.
But no, on a weekly basis, if it closes under 1.
10.53.60.
What's that? Oh,
Really?
Tesla.
So why am I? So what's the Tesla code on CKG?
TSLA. Hold on. Here.
S.TSLA.
There. Hold on.
No, I'm getting.
Where the hell? What?
I know you're.
Am I on?
No, you're right. 1053.60. Okay. So if okay, you're right. Now I have an outside reversal week, which it didn't beat.
See, it got the stops, but it didn't get it didn't completely fill the pit gap.
So it's done it. Yeah, but I'm looking at this. I'm looking at this thing can come down to the weekly cloud at 700. If this thing closes
Andrew,
under 10, yeah.
Andrew, my fractal math on Tesla, if we crack here, right, the next big stop is in my work is like 835-ish.
It's $100 lower. The top of the cloud's 854, and that's where it's going to bounce from.
Well, if we close under 1053, that we did a rally into the 764 off the low when he did his split and all the bullshit that he's done. And I'm not having a go at the guy. I mean, whether you like him or not, he's a thinker. The man, I think that thing is arguably over. It's only Wednesday, but let's see what happens. I mean,
they're trying to hold the markets. Remember, it's still a Wednesday. It's still a midweek shuffle. Now you got.
I know.
Is that it?
I don't know.
I mean, the low is great. So,
Hey,
yeah.
Andrew and Angelo, before I get off, and I'm going to get off soon, but I'm going to share something with you.
Yes,
and
please.
In the room. So in 2009, the CME had Paul Volcker as its keynote speaker at its annual meeting. And somebody I know who's a very, 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 very good trader, from euro dollars to hogs is a very good trader. And one of the great stand-up traders in the pit you ever saw. If he bid on 2,000, he took 2,000. Trust me. So I have a lot of respect for that guy. So I don't go to those meetings, but he had to go to the meeting because he was on the board. So he texts me from the meeting. Is there anything you want me to ask Volcker if I get a chance to ask a question. We went back and forth, and I said, okay, yeah. So he asked Paul Volcker this question. You ready? Angela, hold on to your seat.
I'm listening.
I'm listening. All right, I just put my helmet on. Go ahead.
He stood up at the meeting when it came to Q&A, and several people cringed. And he said to Paul Volcker, did the gold price during your validates you as Fed chairman?
Validate him.
Does the gold price validate you as Fed chairman?
During his years, because think about from 79 to 87.
Well, he took it down from 12.5 to 2.7, which means he tamed inflation.
Yeah, and believe me, the only reason I asked that question, we had talked about it, and I know somebody who used to lunch.
That's a wonderful question, and a wonderful example. Look, he's a true patriot, Volcker.
Yeah,
he looked after generations of people. Because as you're seeing now, if you become greedy and needy, look at where the world is today with inflation.
That's what you just described, Andrew, is most of Wall Street, greedy and needy.
No, I worked.
I'm chuckling. I'm saying that tongue in cheek.
No.
Give us more QE, baby. We need more.
Angelo,
we need more cocaine.
I came from that world, and I am ashamed by that world. I am. I worked with good people in that world, and I've said this many times. When the landscape is fair, I believe in people that make the world better, and I don't mind someone if they want to buy 55 houses, 55 cars, if they make it better. 99% of Wall Street didn't make the world better. They were supported by what the Fed was. The Fed was organized in 1913 to eventually support the underlying system. But the irony is that no one understands. The Fed's not owned by the Congress. They're overseen by Congress. It's owned by the banks. The banks run the Fed. And people misunderstand that. They should be ashamed, and their mothers should be ashamed, and their high school should be ashamed of them. No,
that's why, Andrew, what you just said, because the Fed is actually owned by the banks. In my view, that's why the Fed implemented interest on excess reserves in the first place.
Absolutely,
to help their own.
Of course, they did. They're pigs.
Let me just continue because Judd is asking. So
sorry.
He asked that question, and the question emanated from this, because I know somebody who used to lunch with Volcker in the 80s every month because he had a job that required the Fed chair to talk to him. And Volcker used to tell him that gold was his enemy. As a central bank chairman, gold was his enemy. It cost Judd and I a lot of money at the time, but until we understood it, but okay. So then the second part to the question that was asked was, would you be buying gold? Now this is November, I think November 2009. And Volcker said, that part of the question I will not answer. And he didn't. And people were pissed at him for asking the question, by the way. That's how I knew it was a really good question.
But he was, look, I know people throw stones at him because he was part of the 71-ish, discussion with Nixon to take them off the gold standard.
Yeah.
But he was in the room, I believe.
He was.
Yeah. But in saying that, I mean, if people want to throw stones at me for every mistake I've made in my life, I'd be dead by now. The short answer is he came back and was a patriot, and he fixed it. He fixed it.
Right. Andrew, that's a very good point. I really believe he bore responsibility on his own because he was in favor of repeal.
He was.
He was definitely in the Nixon Treasury.
Yeah. And this is the reason why. And the discussion we're having today, it's an amazing discussion with all of us. This is the reason why you do a lot of work on your charts that don't start last week, but go back to the start of the chart. And that's why you've got to read lots and lots of books about why the system started and why people do stuff. Because every chart and every book will give you an insight to the future.
Yeah, yeah. You can find nuggets that lead you there. This has all been discussed before. There's really, now you got to figure out where they're getting it right and where they're not getting it right. But you know what? It comes back to the Fed. And this is the thing that irritates me and why I come to bury Powell and not to praise him. Because they made, and I've been very long time in criticizing with Santelli, they made Yellen, Bernanke, and certainly Powell, they've made a huge bet. And they keep making a bigger bet, even with flawed models that they think, and that's what irritates me.
Yeah. I think,
I don't know where they think this magical growth is going to come from, Ira.
No, I think to save you from a heart attack, I've concluded basically when the West basically effectively democratized the central banks, that is that they became part of who was elected, it was over. And that really occurred in 71 when we took ourselves off the gold standard, but it really got going when Greenspan and Bernanke got going after the 99 crisis. And let's face it, right? When this all started at LTCM, if I was a smarter man, I would have looked at it and said, shit, they bailed that out, they'll bail me out, you know? And then the real big people went, shit, I'll go real big, because if I get real big, I'll get bailed out. I'll do it again, because no one goes to jail. No one gets penalized. To Angelo's point before, I have no problems people trying, but if you do something fraudulent, you should go to jail. You did the wrong thing and do your penalty.
Well, you know, unfortunately, you can't send people to jail for being stupid, and that's what long-term capital management was.
They
made levered bets on checks they couldn't cash.
But no,
exposure.
There are plenty of people that were executives in the system in 07, 08 should have gone to jail.
Yeah. And the other thing, Angelo, is that, you know, we can't average down like that on losers.
No.
And expect to be topped out at some point. And either it's a huge winner, it's a huge loser, or it's somebody else's loser. Well, wouldn't you like to be able to trade like that? If I win, they're mine. If I lose, they're yours.
Well, that is exactly why every time the investment banks are sitting with the exposure, the economy, quote unquote, gets bailed out. Well, thank you very much. This time, I don't think the investment banks have the exposure. I think the exposure this time is on the buy side, and it's buried deep.
No, I think you're 100% right. It's in the clearinghouses. You saw that. It's in the counterparty risk. It's in the private markets. It comes back to the original question, one of the questions that Robert asked. That's why I rather to be long gold, short stocks, than long bonds, short stocks, because I just don't want the counterparty risk. I don't want the counterparty risk.
Yep, going back to sectors again, right? The financials, the banks are not doing what they're supposed to be doing. All I see is since January, late December, early January, right, when we started calling for a rate of change slowdown, I see nothing but lower highs, lower lows. That's in a healthy economy, right? In a growth accelerating economy, it should be the other way around. Mm-hmm. And that's with all of these quote unquote higher interest rates. Right? But, you know, anyone that knows anything knows it's not about higher rates. It's about the yield curve and the net interest margin. So, you know, will the big banks be able to lend out? Here's Ira and I have talked about this. Will the big banks be able to keep deposit rates at zero and find enough borrowers out there where they can lend at 4% and 5% or more? I don't know. Not in a rate of change slowdown, no way. And that's why you're seeing bank stocks, you know, financials. That's why you see them roll over in an economic slowdown. So, you know, transports, check. Banks, check. Junk bonds, check. Utilities, REITs, consumer staples, check. You know, you can put the pieces of the puzzle together if you know where to look.
Yeah, and a good piece.
You know, and then you combine it with all of your chart, you know, yours and Judd's chart work.
Yeah, look, I think that's right. I think it's just time. It's the time frames with the amazing work on the quad. I mean, great call again, Angelo, on because in the face of it, look, these have been difficult markets. I mean, let's call them out. I mean, last year wasn't so hard to be long the market. These have been difficult markets. If anyone's having a difficult time, don't beat yourself up. It's been difficult.
This has been a pretty hard bear market. It's been a weird one.
Yeah. So don't.
But that's the whole thing. That's why I keep going back to that point, Angelo, is that if you have in your mind that it's a bear market, and you have to sit through a 400-point S&P rally.
Mm-hmm.
You'd have to be nuts. You got to be nuts to do something.
Well, I mean, and to Judd's point and Angelo, when people listen to either Angelo or anyone in the room that has done this a bit longer, it can be very influential on your in the way you think. So you got to really understand who you are and how you trade, how you execute. So if you've been sort of buying high, selling low, just sit back and trade less, and just start to get back into a rhythm of how you operate. Are you a better short-term trader? Are you a better investor? Are you better, or should you? I mean, I shouldn't probably say this, Joe, but I'll say it anyway. Is it, or you should not do this because it's not for everyone.
Oh yeah.
You don't want to kill yourself doing this, for God's sake, because it's. But at the same time, the reason I love it is because it's always kept me geopolitically aware. It's kept me sharp. It's kept me disciplined, because you got to be disciplined to do this. By the way, you got to turn up. I woke up at 3:30 a.m. to listen to the minutes, and I'm 54. Yep. I mean, you can't miss a beat, because if you miss the rhythm, you'll miss the trade.
And the factors involved, Andrew, were always different. So, for example, the bear market that was in 2008 was caused by a financial crisis, right? This one is going to be a Federal Reserve induced crisis because of their behavior over the last 15 years. Now, at this moment in time, coming to a head. For all the different reasons, inflation, supply chain, pandemic, liquidity, you name it. So that one, financial crisis, this one, a Fed crisis.
Yeah.
And that's a new world.
Trade.
Yeah, this is going to be a new world for everybody.
Yeah, if
because
you
like
have
I
trade
like
location and you don't have risk management. And we kind of had that conversation this morning with Phil when he was looking for a short yesterday. If it's at the wrong time of day, it's in the wrong spot. You're not going to survive the pain threshold.
You think you will, but you don't by Wednesday.
Yeah, you just
yeah,
don't.
Exactly.
It doesn't work that way, because that's what the market does. And look, this room will be more and more and more and more important. I mean, God willing, all the rest. We all can turn up every day. And short answer is, you'll need this room more and more, because it is a marriage between your own psychology, which is I think it's probably 55% of people's capacity to trade. How you know yourself, and then then the rest is process. Your process might be more Angelo, or maybe more Ira, or more, me, or I've become more respectful of using my technicals into the right, as Angelo calls them, quads. Because technicals, they do work, but you've got to work in the right part of the cycle.
Andrew, that is so important. That is so critical as to what you just said.
Yes.
That's the key right there. That is the key but doing it with trade location. Anything else in what we're facing right now, people are going to get slaughtered.
Yeah, and
People will get slaughtered.
you notice in this room, I mean, I might say I have no clue what's going to happen next, what the next swing is going to be, and I don't even want to contemplate it or discuss it. And Langer might say it, or Ira, or Andrew, or even Angela. Sometimes you just got to wait.
Well, look, I mean, I get. I mean, Jeff just said I trade on much. I mean, so do I, Jeff. I mean, I trade and I get stopped
He's
out.
just pulling everybody's chain.
Yeah, okay, fair enough. All right, sorry, I don't know Jeff that well, but I mean, all I'm saying is that in the day that I do, I guess if someone said, "What's my edge?" Technically, I'm as good as anyone because I was trained by the best. So I get it, and Judd knows why, right? But where was my weakness? It was definitely top down. I didn't have the same strength that say Angela has, or certainly Ira has. So this room's been good for me because it teaches me to, marry the two, and if the two marry and I have conviction, then I increase my risk.
If you could be the greatest stock picker in the world, but if you are not macro aware, you're going to get killed.
Yeah.
Okay. Growth stocks get crushed in quad 4. Dog shit stocks, and I mean dog shit stocks with probably, negative balance sheets and no cash flow, they will be the outperformers in a quad 2 because that's just what happens in quad 2. It's exactly what happened last year, right? Last year, first quarter, second quarter was like back-to-back quad 2s. And what was going up? Lots of junk, right?
Oh shit!
And that's just the way it is.
Oh man, I wrote an email to Judd and Ira, which I sent to many other people, including Paul Jones, after my mea culpa. And I mean, I do mea culpas every three years. It's what it is. It's
well,
what,
that's
it's
good.
what
At least
happens.
it's once every 3 years.
Yeah, that's my drawdown. I was like, oh my God, I did it again. But I write to myself every quarter to say, how did I go? And I think one of the biggest things that I learned from Paul Jones is that make sure you keep a notebook about what you've done, because otherwise you won't learn.
Absolutely.
Otherwise you won't learn what you did, and you want to improve from how you did it. And then I go back and read it and go, oh my God. So I won't make that mistake again.
Listen, everybody's got the banner, the presidential banner for Head Up Butt Society. Everybody gets it.
Yeah.
At some point,
I mean, people like, the reason I have such great respect. I mean, I don't know, if the Judds and the Iras, that they made their money. What did Howard call it? Other people's money, OPMs.
Yes.
OPMs, other people's money, right? So I worked in institutional investment banking. Okay, I took it very seriously, but other people didn't. They'd run risk so appallingly bad that they just said it was like a casino. They said, if I get it right, I'll get paid millions. If I get it wrong, it's someone else's loss. Now I was brought up by a decent mother. I didn't want to lose anyone's money, so I've always been quite conservative in that respect. But I've worked with people. I said, and they were effectively, they were certainly negligent, and they arguably were fraudulent in the way they went about it.
I think, you have to have a passion for markets and economics, because honestly, if we were having this if this was 10 or 15 years ago, Andrew, I would have been incapable of participating in this conversation. Even 5 years ago, to some degree.
Mm-hmm.
So, where I am today.
Yeah, that's right. That's right, Ira. Privatizing reward while socializing risk.
And I'm listening to both conversations because, I mean, let me ask you a question about that. And what Ira just wrote there is exactly what they did. They privatized Wall Street at the pain of Main Street. And guess what's happening? It's fragmented society. It's made people untrusting of the system. of whatever they choose to do. Then there's, and why is Putin so pissed off? Because there was many people I worked with that should have gone to jail because I saw them do things. I was like, my God. And they walked away with millions and millions of dollars. So
You
in
don't
some
want to
cases,
get me going on that.
I know, and I'm not trying to get you going on it because but I guarantee you a place like Tudor, that wasn't Paul Jones's thing. He gave me a different sort of thinking about it because basically, in saying that, the system was set up for guys like Paul Jones to make a lot of money because zero coupon bonds made those guys a lot of money in terms of the way the margins worked at the exchanges. They made a lot of money just putting money on account and getting interest. But privatizing reward while socializing risk was extraordinary. So Angelo, back to what you were saying. So as of 5 years ago, you know more now. And what's the major thing you know more now than you did 5 years ago?
Oh, God.
Everything.
Yeah, there isn't just one thing. It's the combination of being macro aware and knowing what to buy and when and what to stay away from and why.
He knows what sectors he wants to look at in over what time period. He understands technical setups, so he now knows when to look, where to look, and how to look.
And
yeah,
so
from the technical side, let me just say this. From the technical side, right? ORHs, ORLs, the matrix class, matrix levels, all of the shit that Judd, speaks about every day, right? I owe him, tremendous gratitude for having learned all of this stuff from him. And back when I first started with Judd, there was no room. All he did was just put out,
I was going to ask that question, Angelo and Judd. What year did you start the room?
Well, I don't know, Judd. One day, Judd just said, I think I want to do, some sort of a chat room thing. And I was like, I think it's a great idea.
What year was that, Judd?
I don't know. I think it's only been a year, 2 years, maybe.
Really?
No.
It's been longer?
Yes. You're like me.
Well, I have no idea.
My daughter says I'm the worst with, I'll be, oh yeah, that was only 4 years ago. My daughter will be like, sorry, Dad, it was 12.
I thought it was, I thought it was like 5 years or something.
I can't
let me
remember.
See. Maybe it's like 3.
I've been in the room for probably, seriously, it feels like 10. Sometimes when Judd gets a little upset, yes, it feels like 10 years.
I used to spend a lot of time studying the charts that Judd would put out before we had the room. Okay. So I would put up his charts, his nightly thing, and then his nightly thing was such a mess. I helped him reorganize it. But that was before the room started. But anyway, I would put up his charts and he would be just describing something in the nightly report. And I'd be like, okay, what's he saying? And I would find it. And I spent hours of studying like that. Right. But then back then, too, I would call Judd and I'd ask him a question and he'd spend an hour, 2 hours on the phone with me sometimes, just going over stuff and then shooting the shit besides.
Well, I can assure you the orange of this room, and this is why this room was a bit of a sliding door moment for me because, I met Ira once. I knew of Ira through Howard. But I met him once he was very generous to take me on the floor when he was a director. I went to Chicago as a young boy. But I worked with the same, some of the orange in this work. I know Judd's made his work much better for 2 reasons. He's much more pleasant to work with, as in Judd is, but also the work is genius. It works. It does work. And it's always worked. It worked in 1992. It's working in 2022.
I think, Andrew, if Judd had the room when I began, my learning curve would have been even faster.
Well, yeah, and I was used to training my own traders, so they had to get used to my shorthand, and I couldn't write for beans, and everybody, including Angela, said, "What the hell are you talking about?" Forever.
Excuse me, Angela, you wouldn't have listened to a word. You can only listen to it after you've paid the pain of doing it another way. Sorry. It just
That's very true. I mean, you
it
got
doesn't happen that way. I could have shown you stuff and you would
Yeah.
say, yeah, it's not what I saw on CNBC. Believe me, the amount of discussions I've had with people who I really spent a lot of time, it doesn't matter. You know what? If you're not on TV, it's not real to a lot of people. Sorry. It's just a fact.
Yeah. But I'll tell you what, Ira, from the very beginning, I was always sensitive to the downside. So when I first started to understand things better, you know where I spent the majority of my time? I spent it figuring out and building out the risk management bear market side of things.
That's
Right.
good.
That to me was more important than anything else, simply because I wanted to know, what things should I be looking for under the hood that nobody else is looking at, right? To warn me that storm clouds are starting to form on the horizon. To me, that was of paramount importance, because I figured in a bull market, yeah, that's easy. Just buy SPY and let it ride or some shit. But mathematically, it's imperative to not have big drawdowns, because the math won't work in your favor. So that's what I really started doing back in 05, 06, 07, 08, right? To the point where I actually made 3%, in that whole bear market. So to me, that was a huge win, and I felt really good about that. And fortunately, my conservative nature in wanting to build out the bear market side of things, saved my ass back in the GFC.
Mm.
And I didn't know shit other than what I just told you.
Yeah, I know. I've been there, done that. I'm still doing it.
Now sometimes I think we know too much, and we send out soldiers when maybe we shouldn't be.
Yeah, you should put this piece back out from 2002.
No, well, yeah,
You
but
should republish that. It's awesome.
that was 2012, but the piece was from August 30th, 2002.
Yeah, you should put that back out.
Yeah, every once in a while I put it in a letter but it's, I just put it out here because it's everything we're talking about. And going back to Angelo talking about, and it's why my disdain for Tim Geithner knows no bounds, because Wall Street got bailed out at the expense of Main Street. Main Street paid a dear price, and nobody friggin' went to jail. And it's
exactly right.
wrong. And we're right back into the soup.
And look, these people have run away making $1 million in speeches that they were basically should be. I mean,
let's just set up John Corzine as the poster child for that.
Man Financial, and I made the comment before that anyone that, and Robert asked, I think a really great question in context of why bonds over gold. I mean, my obsession with gold is I hopefully well informed in terms of understanding the cycle we are in today, and there is immense counterparty risk. John Corzine used Man Financial's money, private money that should have been held in segregated accounts, trade Greek bonds.
And those other dickheads from Europe that had that.
That man's run off, and he's sitting in Nantucket. I mean, go fuck.
And fortunately for Ira and I, Barry said the day that the deal closed, where Lynn sold to Man, he said, "Get out the door as fast as you can."
To Revco.
Yeah, to Revco. He said, "Get the hell out the door."
These private brokers, they're spruikers, and look, the only way they found Madoff was because there was a crisis. There was many more Madoffs around. The Gartners and the Paulsons and the Bernankes came in and just, put basically a dagger to the back of and the throat of Congress and said, if you don't do this, you guys are over, which was completely
Right.
wrong. The system would have had a bad 3 or 4 years. The system would be better today, and the people in terms of inequality would be much better today. Get a stronger SEC chairman, which I vote Ara to be, and then prosecute. Because if you prosecute and create disincentives, then people in the future won't do the same.
Well, they went to the greenmail model versus the prosecution model,
Yeah.
and that's what really.
And I'll tell you, and what you also need to remember is who bought Mann's portfolio of European bonds, right? That's where they lost the money.
Is it Goldman Sachs?
Nope.
Who?
Georgie boy in a private. He
Was
took
it
the whole portfolio.
George Soros bought it?
Yep.
Oh God.
That's the fact, my friends. And he was buying Greek bonds that were yielding 32 and 33% on the 10-year.
Well, yeah,
I mean,
because Corzine couldn't get enough leverage
Yeah.
with U.S.
Yeah.
rates, so he bought all the
money.
fucking junk from the peripherals. And when Greece went down, he was fucked.
Yeah,
Here's the
he-
most important thing in life. I went to a funeral last week for a friend of my mother's. My mother's 87, God, and she's still, going well. She's never worked a day in her life, but she's mother to 7 children. I'm one of 7. And she sat next to me. She looked at me and said, "Okay." And the guy was wealthy. She said, but he was a good man. And look, I've never been to a funeral with a balance sheet put up on anything. So these people who spend their lives trying to deceive and cheat, I never understand. I don't get it. I want to compete. I want to beat Ira, but I want to have a glass of wine with Ira. But I want to learn. I want to learn from Ira. Oh my God. How do I? And that's the way the market should work. It shouldn't be about. But we're all got egos, and we all make mistakes. We all come from different places. Oh my God! Don't be people that get greedy, because you only need 1 car, 1 house, and 1 wife. I mean, if you make a mistake, do it again. But
I'm not sure about the last.
all I'm
That's a
saying is,
debatable point,
all I'm
man.
saying is, in terms of trading, is that there's different ways of doing it. Cheap, yeah, it's definitely cheaper to keep. I've known many guys who've made a lot of money, and now they've got no money because they've just had 5 wives. But all I'm saying in terms of trading is that, work out your own style, get a rhythm going, and understand the cycle you're working within.
Yes.
All right. I just found a client letter that I wrote January 2008. I'm going to send it to you guys. Then you can tell me how stupid I was, or how shitty the letter is.
Oh man, I sent one in 2020, and mine was bad. How badly I traded it. So I love to read it, and this is what anyone in the room listening to these conversations, please be very humble and very kind to yourself around when you make mistakes, because that, to Ira's point before, you learn through your mistakes, and if you are honest with your mistakes, you'll be a better investor and trader. If you ignore them, you'll continue to repeat them.
Okay. Attach file. I mean, I don't think the letter was half bad.
Let me see it.
I'm doing it right now.
Go ahead. I'm going to stop recording this.
Yeah.
Unless you want me to keep recording it.
I will be getting the hell out of here. I'm going to play bocce ball.
Let me ask you one question, Ira, before you go. Are you there?
Yeah, I hear
Okay.
you. I hear you.
So what's your seeing we're being a bit philosophical tonight because the Fed is not philosophical at all. What's the biggest learning? What's one of your, not your biggest, what's one of your biggest learnings you've had as a investor / trader? What was your, is there a moment that you had when you went, oh shit, I'm missing this, or what?
Andrew, I'm really having trouble here. Right.
Okay, so let me ask the question again. Can you hear me?
Yep.
Okay. So my question is, because we're being a bit philosophical today, in your esteemed career, do you have a moment in time or a learning that you went, I need to change this to be a better investor and trader? Is there something that?
Yeah, I could tell you the definitive moment.
Please do.
1989, when the Brits under Maggie Thatcher were going to join the EMU, the European Monetary Unit Mechanism, okay? And they were getting ready, so they had to peg themselves to the Deutschmark. Shit, I had done a lot of work and looking at this, and I was convinced. I think it was, I'm going back 33 years, so cut me a little slack. It was in September, I think, of 19.
So you're looking at pound mark?
Yeah, here. I don't know. I don't have a chart up, but
I'll pull it up.
I will tell you that this is September of 1999, that I thought that they would join at 290. No, I'm sorry, at 270, because they wanted, to join at that it would only be 2.7 marks to a pound.
Yep.
They joined at 290.
What year was that? 89.
September or October of 89. What was this sterling mark?
270.41, January 89.
What was it?
270.41.
270.41. And what was it in September?
Hold on, I'm looking at an annual.
Okay. So go to a quarter.
Yeah, that's what I'm going to do.
This brain still remembers too much shit. I can tell you that.
Well, no. The reason why it remembers it.
So 89 or 88? 88, third quarter?
No, it would be. I believe it would be 89.
89. So the
September
third quarter, the low was 270.41. It closed at 272.29.
What was the high?
The high was 305.35.
And there it is. That's the trade. So I was probably I was short the cross, probably at around 285, 286 in anticipation, because I wasn't the only one thinking that. And thinking I'd be able to, it'd be a great play. And I had left my sister, who was kind of emotional, but I left her a hard stop at 295, and she covered everything for me. And I had the biggest position I've ever had in my life, by the way. That's how sure I was of it. And I got bruised and battered pretty good because I didn't listen to the market. The market was pushing up, that they knew that 290, and I was still convinced they'd be crazy. Now, when George Soros broke the Bank of England in 1990,
the Sterling Mark cross, yep,
which was the same cross.
Indeed.
I was on that beginning about May, because I said, well, it's proven wrong, and I was watching them raise interest rates. Nigel Lawson was the Chancellor of the Exchequer, I believe. And I got all my money back twice over on that play, as they had to pull out. And I actually made more money trading the forward market because Jimmy Ola had stuff to, he was just getting out of stuff and needed prices 2 and 3 options out. And so, first Chicago hosed me because nobody was making spot prices, but I needed to spot against the forward. So they rated the overnight roll, but I still was a really good play.
Well,
And
this is one of the reasons why, and the question I asked of Ira, and what I took away from that was you said, I didn't listen to the market. Is that right?
I didn't listen to the market. I learned a very valuable lesson.
And the other thing that goes on when the world goes into monetary controls, I saw it with the tire bark in 98. You can get the exchange right and the forward wrong if you haven't got the forward right. These guys can snooker you in a second. So just be very careful in this world we're living in. I mean, it's very, it's going to be exciting, but it's going to be, but it is what it is, right? So.
So you're asking me now I don't have a chart in front of me and I can tell you those prices.
In which?
No. And the reason why he knows those prices is because he's disciplined every day, and Ira does that.
In the bat?
Even the tie bar.
What it's what is that? TBT or something?
THB.
THB?
Mm-hmm.
Okay, there it is.
So look, I mean, this happened in 98, right? So it was massive and they had to create currency controls. And look what happened. It's the same that happened. It's the same. Go to a monthly, Judd. You got a monthly?
All right, Andrew, I have to pop, but I do have a scheduled appointment. Thank you. This is great. And thanks for the support on Poser. You know how many hits that's gotten already?
Massive, mate. How many?
70,000, I think, as of today.
Wow.
And how many? And what's your biggest before that?
Oh, you can ask Richard. We're not
400
even.
or 500?
Yeah, probably 2,200, 2,300. I think Richard will know the numbers.
Well, let me wait. Let me indulge you for a moment and the room. I mean, the reason why I don't know him, but but people have become very popularized with him. I think the reason why people are popular with that is that when he writes, it's you need to be very intensely understanding of macro, right? You do.
Right.
He's very, very technical. What was brilliant about your interview with Richard and yourself with him was that you were able to articulate a simplicity that his writing is not critical of him, that's hard to convey.
Well, that's very kind of you to say, but again, that's a tribute to Richard, and that's why.
And congratulations to Richard too.
He's a great interviewer.
Because sometimes interviewers get in the way of the people, and Richard's exceptional at that, and he gives you guys space to just breathe and do their work. I personally have had many people hit me in terms of emails and stuff. Oh my God, I think you guys should do a follow-up, definitely, because Zoltan's work is in written word.
Yep.
And I've done. I've been. I'm in this business. I've been in this business a long time. I read it 3 times.
All right, guys.
See you, Ira.
Hey,
ciao.
Shrimp on the Barbie. Stay on top of that gold, S&P gold. I think you're really onto something magnificent.
Thank you.
Okay, well, I got them. They're all plugged in. S&P gold,
gold ruble,
gold spoos. It's all there.
All right, guys. Lovely.
I sent you guys a copy of my January 2008 client letter.
Yeah, it came in a windmill dead thing that can't open up.
Did it?
No.
Well, that's retarded.